Good afternoon, everyone, and thank you for joining us for this important conversation. I think few things are more critical to financial health and prosperity and well-being than whether we have thriving small business sectors. Micro and small and moderate-sized businesses are the engines of growth. They are the engines for helping people move into prosperity and out of poverty. And yet, everywhere, these businesses struggle to get credit. So we are going to be talking about how to do better with that in general and also with a lens specifically on emerging markets. I want to begin by asking my panelists to introduce yourselves if you would, and then we'll start the conversation.
Yeah, okay. Hi, I'm Berna Romulo Puyat from the Bangko Sentral ng Pilipinas. As a background, I'd like to talk about the MSME situation in the Philippines. MSMEs are a driving force of our economy. 99.5% of all business, it comprises of 99.5% of all business enterprises, 36% of GVA, and 2/3 of our workforce. And yet, access to capital and finance remains one of the main challenges of MSMEs. So either can be attributed to two factors. MSMEs are reluctant to go to banks because they don't have a credit history, or they don't have acceptable collateral. On the other hand, banks are hesitant to lend to MSMEs because of the perceived high risks, because of MSMEs have limited information and visibility into the market. When we looked at the BSP supply side, the percentage of MSME loans compared to the total loan portfolio has been continually declining. From the last quarter of 2020, it was only at 8%. It went down to 6.8%, which leaves MSMEs to rely on internal financing. Most MSMEs in the Philippines, and I'm sure in other parts of the world, rely on internal financing. Second, go to close relatives and family. Third, those who do borrow, like I was looking at this ADB study on MSMEs. Those who do borrow, there were 17% who did try to apply for a loan, but only 4.8% was able to obtain a loan. So with this as a background, the BSP is continually looking for new credit models. Right. So that we could we could have a better insight on the credit worthiness of MSMEs, and to see how we could maybe rely less on collateral.
Wonderful. We're going to talk in more depth about the new possibilities with credit models. Kwame, could I ask you to self-introduce?
Thank you very much. And hello, everyone. I'm happy to be here. My name is Kwame Opong. I'm the Director of FinTech and Innovation at the Bank of Ghana. And as you may be aware, I think Ghana is a country similar to most markets, either in Southeast Asia or on the broader African continent, where we have about, according to our Registrar General's Department data, 92% of registered companies are actually SMEs. Of that, 50% are women-led. Even more interestingly is that 80% of employment is contributed to by SMEs, and about 60% of our GDP is driven by SMEs. So it's a very important sector for us as a central bank based on our mandate. And what we've been trying to do over the years is find ways and means to help grow that sector, because it has a very large impact and a shared benefits for both the general public, businesses, and us as a central bank. So this BSB initiative and this conversation today, I hope will give you some insights into some of the things that Bank of Ghana is trying to do, and hopefully also learn from the rest of the world as to how we can achieve our objectives. Thank you very much.
And Bahali, introduce yourself and a few words on how you're viewing the importance.
Yes, I am representing the Hungarian Central Bank. Good afternoon, everybody. Small and medium-sized enterprises are really important for Hungary because they employ 2/3 of the workforce. 10 million people are in Hungary. There are 100,000 small and medium-sized enterprises, approximately 700,000 so-called self-employed people, and approximately 15,000 big companies. 1/3 of them is multinational companies, which are very strong. Also, for us, not just for the labor market, but for the society, SME is very important. This is why the central bank was focusing in the last 10 years for having a special lending scheme for the SMEs. 9 years ago, we introduced a funding for growth scheme, which was very important. In the low interest rate environment, it worked very well. The central bank gave a pre-financing for the commercial banks on a 0% interest, and then we set the maximum margin what they could charge, which was 2.5%. Also, for many, many years, the small and medium-sized enterprises got a very cheap financing. It became even more important during the pandemic. We beefed up the whole initiative, and at the end of the pandemic, it was the main force to regain the recovery in the Hungarian economy, which was in 2021 in Europe was the highest growth rate, 6.5%, and the SMEs were contributing due to the help of the central bank with very, very cheap financing. So it was a very successful. $20 billion was given to 70,000 small and medium-sized enterprises, and this kept the whole system alive and contributed to the growth.
Thank you. So this whole conference is about possibilities that are being unlocked by new technology and new data. And we know that one of the things that has made it difficult for MSMEs is that lenders don't have enough information to be able to assess the risk about them. And now we have all kinds of new data, partly because almost everyone has a cell phone. So let's talk about how you're viewing the possibilities of doing better in this sector by using data. And Kwame, let me start with you on that.
Sure. So I think really we look at it from this perspective. Some of the efforts that we have undertaken by leveraging data, I think it's typically been private sector led. We have gone from a place where formal structured information that you get, financial service related information is gathered, and we go through the normal processes as a traditional credit assessment process would. And through that, we've been lending. The problem is it's been incompatible with the SME space, frankly, even when it comes to just basic payment collection and the KYC around creating accounts for merchants, right? The due diligence requirements. We even noticed that even that, at that level, was a problem because we tried to look at international standards, and we realized that we probably put in place a mechanism that is only really applicable to larger SMEs and perhaps larger institutions. SMEs and MSMEs are just out, which means the basic points of even being able to get access to an account, a digital means of collecting payment, was a problem. So as a starting point, that was an issue. But bringing in the mobile money ecosystem and the fintechs under regulation that was risk-based and also proportionate in its requirements, they were able to do that. So we started off by introducing several measures, which was the first one is a GHQR. It really says QR, but the idea there is a simplified means of collecting payment digitally across using the national switch, a reasonable price and commercial model. So that made it equal, or brought at least the formal financial sector as well, banks and other institutions in that space, at the same level as the digital financial service providers and non-banks. Now, obviously, again, as a central bank, we do not get involved in certain things, but we play a very key role leveraging our convening authority to bring stakeholders together. That's one. And two, putting the right policy in place so that some of these things that we want to see in the credit market can happen. So how can we make that work? So obviously we try to address the first point, which is payment collection, which enables the data availability, in addition to other initiatives that we work with other government agencies, such as we now have a national ID system, which is biometric, a digital addressing system. So all of that, we support on that. Now, when it comes to credit specifically, besides addressing this, we've also, as part of the BSB initiative, really taken a step back and asked ourselves, this existing model of credit delivery has worked for a while, but has it worked enough? And in spite of all our efforts, I don't think anyone can, with a straight face, say yes, at least in Ghana's context. And so what do? We have to rethink these things. It may work for a segment, but for the larger segment of SMEs, and as I gave the stats, a larger segment of entities in the business community, this just does not work. But also that's because we're looking at a model which says, let me look at your ability to pay versus your intent to pay. Now, it's not an either or, but it's important that we start looking at intent to pay, and here's why. We saw digital financial service providers, in the markets start to support banks with better scoring. And often, they were not even using, in fact, there are some models in Ghana, and again, I've seen some of them out here. There are some models that are not even using direct financial information to score borrowers and lend to them, and the NPLs were no worse than the traditional portfolios of the banks using the existing models. So clearly, rethinking the approach was important. And so we're looking at this model where we want to consider intent to pay versus the ability to pay. And we want to test it in our sandbox. We recently launched a digital regulatory sandbox, and the goal is to be able to bring some participating banks who are part of the program and perhaps suspend some of the usual requirements we have as regulators for us to test and learn. We may find out this is the worst decision possible and perhaps does not require scaling, but we would at least have learned what not to do. But our hunch, and from everything we see thus far, there's a likelihood that this may be the game changer that we want. So we're pretty excited about that, and we're looking forward to executing that project.
So thank you. You're touching on my next question as well, which is not only are we seeing the opportunity to bring more data into this type of underwriting, but we have an overlay on that of concern about the regulator's comfort or discomfort. I'm a former bank regulator myself. I was deputy controller of the currency in the United States, and we know that if we talk about trying to evaluate intent to pay instead of ability to pay, there are questions that come up about loan quality. The industry worries that if they use new data, the regulators may not approve of it. So Bernadette and then Michele, talk about how you view the regulatory dimension to the data question.
Recently, the BSP institutionalized the regulatory sandbox framework, which of course promotes a more active, evidence-based, results-driven assessments of new and emerging solutions. We've had, even back before we institutionalized the regulatory sandbox framework, we've already done this under the test and learn approach prior to this a few years back. But when we talk about maybe interventions that the BSP can do for MSMEs to be able to borrow more, we listed down all the challenges. First is the reluctance of financial institutions to lend to MSMEs. Number two is the borrowers tend to find it intimidating to borrow from banks. Number three, a lot of them don't have documentation requirements. And number four would be a lot of the MSMEs use a personal account versus a merchant account. So in each one, for example, the reluctance of financial institutions to lend to MSMEs, we already first, through our national strategy for financial inclusion, it deals with the expansion of our credit guarantee schemes. Under the National Strategy for Financial Inclusion of 2022 to 2028, we want Phil Guarantee to extend guarantee to financial institutions, especially for women-led MSMEs. In the Philippines, it's 66% women-led MSMEs, so it's larger than in other parts of the country. So we hope to expand the guarantee scheme. We also have an alternative credit model called the CRD in cooperation with the government of Japan. It uses credit scoring models, so it reduces the reliance on collateral, and based on the credit scoring models, it evaluates the MSME's capacity to repay their loans. Number two, when we talk about MSMEs perceived loan applications as intimidating, recently the BSP also put out a circular called the Standard Business Loan Application Form, which makes borrowing from banks less intimidating, more friendly, and interesting enough with this SBLAF, it's gender disaggregated. So we're asking banks to tell us if the one borrowing is a female or male. Third is the inability of consumers to open up accounts. We are hoping for the full implementation of the national ID. So with this national ID, all you need is a national ID and you can open up an account. In fact, that's what I've been doing. The central bank issued 6 licenses to digital banks, and I've been opening up in all the banks, including Union Bank, and I only needed to show my digital national ID, and I was able to open an account. So it makes it easier to open up an account. And the use of personal accounts, because most MSMEs, they always tell us that they use personal accounts because they find it easier versus a merchant account. So recently, we are developing what we call the basic merchant account, which makes it easier for merchant accounts to open up business accounts, and it allows them to have a rich digital footprint wherein our financial institutions can have basis to lend to them. So these are just some of the things that the BSP has been doing.
I will say this, solving for the digital identity issue is huge. That's the foundation, I think, for all this other progress. And the disaggregation of gender data, I know this has been an issue for Women's World Banking, among other groups who I know are here, because right now it's difficult to know what your gender record is. Mahali, talk from your standpoint about the regulatory dimension of this and how you're looking at that.
Yes, let me mention two examples from our own experience. To address the data asymmetry between the bank and the small and medium-sized enterprise, we decided a couple of years ago that we will set up a credit information system for SMEs, which is obligatory, and the system is owned by the central bank. All information must be fed by the commercial bank into the system. And then the central bank gives a probability of default data for those banks who are requiring about the given customer. It works very well. And there was a second initiative, which is really, that time was revolutionary, that the Central Bank of Hungary decided that it will share the risk with the commercial bank. So practically, we have bilateral agreements with the commercial banks. If they have a SME portfolio, we are taking half of the risk into our books. So practically, the balance sheet of the central bank is having items which are commercial risks. And this is one way to enhance the origination appetite of the commercial banking system towards the SMEs.
So we have a little bit of a conundrum in that we're talking about the power of new digital data to open up opportunities, but we're also in an environment where we're more concerned than we've ever been before about protecting the privacy of data. And also many countries with data localization laws that are limiting the movement of data. Let me ask any of you to speak to how this issue connects to the data privacy and data protection topic.
Okay. Sure. So I think this is one of the things that you're confronted with when you're focused on solving one problem. So it starts off with, consumers in my country do not have access, and you explore different mechanisms and policy opportunities, and then now you're solving the access problem, so you're making steady progress. Then now they're in the digital fold, the next problem comes up. We're sharing information, where is it going, how is it being used, and is it being used ethically, and all these other concerns. Is it being used against me over the long term? And even in addition to that, am I being adequately informed about it, which has to do with the consent layer and the ethical dimension as well? Am I being adequately informed? Most of those who've been recently brought into the financial sector came in through the mobile channel. and it's either an entry-level smartphone or a feature phone. And I was making this point that on this device, really, you're extremely incentivized to just hit accept. In fact, it's not even accept on the feature phones. Click 1 or press 1, and that's it. Just move on and get the service. What are you accepting? What are the terms and conditions really? What are you signing off to agree on? These are things that, as we all know, are written at graduate level language to begin with. Financial literacy, as we know, is not even strongly correlated to literacy in general in some of our contexts. So even people who can read cannot appreciate those terms and conditions. So now you have two layers of problems that you're dealing with. One, can people understand, and is it being presented to them in a way that is reasonable? And two, where is that data going and how is it being used? And so in Ghana, we introduced a Data Protection Act, which is looking at addressing some of those concerns. But I think even as we try to implement that, we continue to learn that having a law is one thing, but the fast pace of innovation and how data can be used requires you to, in implementing that law, either as a central bank or any other regulator in that jurisdiction, to figure out how to evolve to meet that. Otherwise, if you're just taking a very static view of it, you would not be achieving the essence of what you're trying to achieve. So making sure, right from basic product approvals to monitoring the markets and monitoring market conduct and all that, how are you identifying the ways and means in which data is used? For instance, digital credits, which we are talking about. Credit scoring has been great, it's advancing, but what really goes in there? Is it potentially going to exacerbate existing bias and existing data that the machines are learning from? And what can be done about that? And even the bigger question of, are regulators adequately equipped and resourced to understand what goes into some of these algorithms to be able to make a judgment as to whether some things are acceptable or not? So these are all things that I think we have to, one, build capacity internally, two, also take a bit of an agile and dynamic view of the application of the data protection laws, and perhaps a third dimension being taking a serious look at the consumer consent layer as well, to make sure that at least financial inclusion is not just giving people access and creating a variety of products to make it available to solve their needs, but also an informed usage of those products and services. And that third layer is very important. Thank you.
Holly, do you want to weigh in on this?
Joanne, I just want to ask you whether you will raise the high inflationary environment.
Say that again?
The high inflationary environment, will you raise this issue? Because I want to talk about that.
Inflation?
Yeah.
Yes, I couldn't hear you over the echo in the room here. Yeah, I actually would like to go to that. We're in a moment where we have very high inflation. We're also worried about the potential of recession. So how does that factor in?
Yes. Well, I would like to invite the attention of everybody that the game has changed in the last 1.5 years. So practically, in the last 10 years before pandemic, we had a low inflation rate environment, no inflation practically. And this, what has happened since the pandemic and then the Russian war just add to it, inflation is here, and inflation will stay with us for many, many years. And this is a huge trouble for the emerging countries, and especially for the small and medium-sized enterprises, because they will get a loan on a much, much higher price. This is why I do believe that new methods has to be found, especially in the emerging markets. So, because there is no SME which can pay back a loan with 15% interest rate or 19% interest rate. Also, definitely in this new environment would be very important that the small and medium-sized enterprises, which are very important for all the labor markets, we have seen that practically they are the most important part of the labor market. It would be very important that we will not leave everything to be solved by the invisible hand of the market, when all of us believe in Adam Smith's invisible hand of the market. But this time, for the next couple of years, until the inflation will be here, and I am sure that it will not go away in 1 or 2 years. For the next couple of years, we have to prepare a new way of helping the SMEs to get credit. And I do believe that there are many opportunities for there. In Hungary, we are doing probably the most obvious one, that the state subsidizes the banks on the interest rate, which is originated on the loans which are originated to the small and medium size enterprises, but this is very expensive. The next one would be that the central banks are intensifying and helping the commercial banking sector to originate more loans. For example, we are doing the so-called sterilization. The commercial banks give 100 loans, and we take 100 deposits from the same bank, and we give the high interest rate, of course, which is a good business for the bank. And the third option is what I have mentioned already, that the central banks take on their own balance sheet part of the risk, which is obvious. And in a high inflation environment, this risk will grow.
Very, very interesting. We only have a few minutes left, but Bernadette, do you want to add comments either on the inflation point or more broadly on the data protection
No, more
side?
of, I guess it's more of, we're all talking about digital banking, making sure that MSMEs have access to finance. And I think what the pandemic has shown us that digital banking has definitely increased because of the pandemic, as what my colleague was saying. In the Philippines, 2019, 29% had transaction accounts, but this increased to 56% in 2021, driven by e-money. So 22 million Filipinos had a transaction account. Out of the 22 million, 21.8 million were e-money accounts. So that's how important e-money is right now. So it's very important, as we know with digital banking, it reaches the underserved. There's no brick and mortar, and they're able to reach those that have not been reached by banks. So it's very important to really push digital financial products, because in order for MSMEs to have as I said, rich digital footprint based on their transactional data. So that's what we in the BSP, we've been pushing for. We have the expansion of the QRPH. Last 2021, we expanded the use case of a QRPH to person-to-merchant account. So this is a simpler and more affordable payment scheme for our MSMEs. As I've said, we've given certificate to operate to 6 digital banks. We've already talked about what we're adopting, the basic merchant account. And of course, also all these alternative credit models. We are also looking at the intent to pay, but right now we have the CRD project with the government of Japan.
So we have 1 minute left. I'd like to invite each of you to just say 1 or 2 sentences of what you hope people will take away from this conversation, the people in the audience. Mahalia, let's start with you.
So exactly 40 years ago, the US was successful to fighting inflation. Ronald Reagan and Volcker has done it in 6 months, 1982. This will not happen for the next couple of years. We will stay with inflation. The problem will stay here, and my main point is for takeaway that the invisible hand is not enough. We need the visible hand of the public, the state, to deal with SMEs.
Thank you. Kwame.
Well, thank you very much. I think that's one important lesson that I really will reflect on. It's because it's a reality. I mean, listening to 3 people from 3 different continents experiencing the same challenge, I think that says a lot. But I would also say that the one important thing is these challenges will not be the end of it. We'll continue to face different challenges in different ways. It's important that policymakers and regulators are able to take a step back and really rethink how things have been done over the years. And so for us, we'll continue to explore new initiatives and new approaches to solving our local problems. And we're particularly excited about our partnership in the Business on Border projects with MAS and Proxtera, and we look forward to potentially sharing the results of that in the next FinTech Festival next year. Thank you.
Bernadette, 20 seconds.
Yeah, the challenges that MSMEs in the Philippines are experiencing are not unique to our country, but in other countries as well. But with these challenges, we have solutions. And it's good to listen to other regulators to see how they are tackling these problems of MSMEs, and conversations such as these talking about new credit models are really needed so that we can all find ways for greater financial inclusion of MSMEs.
Our time is up. Please join me in thanking our panel.